What is up, everyone? International Investing here, coming back at you with another video. We have some pretty important stuff coming up. So Powell is talking tomorrow after the bell, and then we have other Fed speakers talking throughout the week. It's going to be a pretty important week, and I think you're going to start to see the SPY sort of come down a little bit and adjust. Why do I think that way? Well, let's take a look at our financial tools that we have for free on internationalinvesting.online. So, for those of you that didn't know, we essentially take the SPY stocks right here, and we take the price spread and the forecasted earnings of all the SPY stocks. So we are starting to go into what is also known as the earnings recession. Now, I know a lot of people are afraid to get bearish on SPY, especially right now. I am not. I think now is the best time to get bearish on SPY, and I'll explain why in a little bit. So take a quick look at this. First of all, let's just go with mainstream media is extremely bullish in the market right now, and the market has been up for like 8 or 9, maybe even like 11 consecutive days. I think today was the first red day in the market in like forever. Take a quick look at these companies and the weighting that they have on SPY, right? So Apple has a 7% weighting in SPY, Microsoft makes up 6% of SPY, Amazon 2.63%. And then take a look at the price spread weighted to these companies' earnings. Tesla especially, 69%, something like that. So if you take the weighting of all those companies, right, and you basically put that on a forecasted price, the forecast actual SPY price is $394.18, which is way lower than where it's currently at. And if you don't believe me and you think my intrinsic valuations are bullshit, I'm here to provide you with other sources of information. So this is simply Wall Street, which calculates intrinsic value on a lot of things that I use for a lot of valuations on stock, especially brand new companies that I'm trying to get into before the market prices it correctly. Take a look at Apple. Close to 50% over fair value. Take a look at Google. Google is one of the only undervalued stocks right now, and the only reason Google is undervalued is because people think that Google isn't keeping up with all the other companies when it comes to AI, and people think that Google as a search engine is going to get outpaced by AI in the future. So you can currently get Google at a discount. But take a look at this. Microsoft, 30% over fair value. NVIDIA, 170% over fair value. Great short at this price, by the way. Tesla, 80% over fair value. So it's not just my international investing screener that's showing that the SPY stocks are extremely overvalued. I just showed you some of the biggest holdings in the SPY and kind of where they're looking like in terms of fair valuations. The other thing that I want to show you is Amazon, which I forgot to pull up before the video, so apologies there. Take a look at this. Amazon is still undervalued, but only 6%. So we're basically topped out on all of the top SPY stocks, and this right now is why I'm starting to get bearish on SPY. Now, let's go back to the chart and take a look at this massive, massive run that we went on SPY. So, boom, look at that. We have an ascending channel. It goes straight up. Every time we tried to break below the channel, which was here, 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 we use the channel as support. Now, during the channel movements, how do we confirm that it was going up, right? Gap ups tell all. Take a look at the gap up here. Boom, gap up inside the channel. Boom, gap up inside the channel. Boom, gap up inside the channel. And then today was the very first gap down inside the channel, and it was such a big move that it led to actually breaking below the channel. Now, throughout the day, the SPY tried to regain the channel, but it wasn't able to, and now I'm using this right here, right below this candle where the gap down was. Let's zoom in on this because it's pretty important. I'm using this right here as my stop loss for my short. Right? So I'm in SPY puts till Friday, right here, and I'm using this as my stop loss. Now again, this line right here that I drew straight across, that's my stop loss. If we can go above this line and break back into the channel like this tomorrow, it's possible that SPY maintains the channel and that this right here was a false breakdown, right? So again, we're in the play, but we're looking for confirmation. We have a stop loss set. We are minimizing our risks. We are looking for profit at this point. Anything like another, like let's say tomorrow we open and we gap down again on open like this, that's massive profit down here on a put position. Massive profit, right? Now, why am I bearish on this week? Because all this time, the only thing that's kept the market sort of running through the rate hikes is a very dovish Jay Powell every time he talks. Everyone knows that. Everyone on Reddit is like, haha, Jay Powell effed your puts, ha ha ha, right? So they've been raising rates, which has been affecting companies in the earnings, which hasn't been shown yet, but it's shown in the forecasts, which is what my scanner picks up on. The forecasts are looking terrible going into August. However, even though the forecasts are looking terrible going into August for tech and SPY and growth stocks, the things that are looking really good right now are utility stocks, oil and gas, that sort of thing. They've been beaten down into the ground. You know what else got beat down today? Take a look at this. JD.com. And what did we sell covered calls on JD at? At the 37 mark. We sold covered calls right here at the 37 mark. So are we upset that JD.com gapped back down to 37? Not at all. Because on Friday, if we are just below 37, we get to keep our JD.com shares. We get to keep all the premium that we sold in the 37 covered call. And now we get to sell 40s up here. When we sold our 37s, we were down here at 34, which is crazy. So this is big stuff. Another thing that I'm bullish on, I'm not exactly bullish on China just yet. I want to make that very clear. I think China got beat down in this recent red day today. However, I am not bullish on China just yet. I think China is in a good spot to buy if you're looking to get into a very good company. Like for example, if we take JD.com, we can take a look at the valuation of JD.com right here. JD.com, 30% undervalued. Good company, right? Good company. I wouldn't mind getting into more JD.com right now. I wouldn't. But I want to make it very clear that I'm not exactly super turbo bullish on Chinese stock. What I am very bullish on is nuclear energy, gas, oil. Take a look at some oil stocks that I found that have pretty crazy valuations. RepX. It's a oil company, 82% under fair value. Take a look at LEU, another good one. This is a nuclear stock. They just got approval, by the way, by the Department of Energy to create HALE uranium, which is it's a special type of enriched uranium that only certain places of the world have, and everyone is moving towards it because it's more efficient, right? So everyone's moving towards this like HALEU uranium, and this company has the biggest production site in the entire U.S. and the only production site in the entire U.S., and their facility is the size of the United States Pentagon, okay? So this company is a complete disruptor in the energy sector, and it's going to be a $100 stock. Mark my words, this is going to be a $100 stock probably before the end of the year. The only question about this stock is when will you get the best entry? And if you don't mind holding long term, this is the perfect stock for you. If you do mind holding long term, the only thing that I would say that to look out for is that their next earnings report is not going to be profitable. So it might be possible their next earnings comes out, or right before their next earnings comes out, you see a little downgrade in the stock. Maybe it goes to like $32. Maybe we even hit $28, and then we rip back up going into December when they pass phase 1 and they actually create their first nuclear enrichment. So be on the lookout for that. let's take a look at this. Let's go to my watch list here of undervalued stuff. So TIO. TIO is a stock that many of you probably know about, probably heard if you're in the Discord. But essentially, this stock is in Africa. And what this company does is they take African farmers' crops and they allow them to trade on the commodities market. It's like a fintech company. Now, this company reported a crazy earnings report, which drew my eye to it, right? And then after reporting the crazy earnings, they were convicted of fraud, or basically accused of fraud by the Hindenburg short report. Hindenburg has shorted many companies in the past, and typically whenever Hindenburg short attacks something, a meme stock crowd comes to the stock. Now, I noticed Hindenburg short attacked a company that just reported crazy good earnings, right? And their short attack was focused on the construction of their new facility, saying that the construction isn't moving exactly to pace. Having been in the construction industry, especially on giant projects like this, giant commercial projects like this, I know that the MEP process, the mechanical, electrical, and plumbing process, and the foundation process take the longest time. After the structure's already up, after the underground plumbing's already in, the project moves very quickly. But before that stuff is up and before that stuff is in, it looks like nothing is being done on the project, even though it really is. And also, even though they said they started when they started, it doesn't mean they got the proper permits and everything approved until today, right? So I'm veering on the side of, on this risk on play, if I'm right, and if TIO is not a complete scam, and the numbers that they're reporting are actual numbers, and the earnings that they're earning are real, this stock is 99% under fair value. I'm not joking when I say that. I'm telling you right now, this $1.28 stock is worth a $144 valuation. And if you don't believe me, take a look at this. Boom, fair value, $130 a share. So I don't make this stuff up, ladies and gentlemen. Like, I put a lot of research into TIO. Unfortunately, without being in Africa, without seeing the site, without seeing the company, it's hard for me to tell you 100% if this is a legitimate company or if it's a scam. And in my opinion, that is literally the only risk in this play. Your only risk is this is a complete fraud and scam, and that your initial investment goes to zero. So don't go full port into this stock. I would suggest putting maybe 5 or 10%, maybe a little bit less of your portfolio into it. And it's one of those lottery ticket stocks where if TIO comes out and the Hindenburg research report was spreading false rumors about them, they can actually turn around, sue Hindenburg, get more money, and then next earnings report, they'll report even more gains and basically clear their name to the point where they'll be basically in a short squeeze situation where they can go from $1.28 all the way up to $20, $40, $50, $60, because there's a lot of people that short Hindenburg reports as soon as they come out, because Hindenburg is reputable for pointing out scams in the past. So if you think TIO is a scam, don't get into it. If you're willing to take a small risk that TIO might not be a scam, it's quite possibly the most undervalued stock on the entire market right now. I haven't been able to find any stock that is more than 99% under fair value. I don't think it's possible. So I'll put that out there. BBIO. This one is it's a health company. I found it because it's on Google's Investment Capital's portfolio. So Google, for those of you that didn't know, manage a portfolio. They have a hedge fund type deal. And this is one of their biggest holdings. The current price is $16.52. The fair value is sitting somewhere around $116.90. That's a pretty big gap, if you were to buy the stock and just hold it. So consider getting BBIO. I'm not going to go too much into that because I didn't do a whole lot of research into BBIO. I don't like healthcare stocks just in general, unless I'm trying to play some kind of pop or news report. Okay, Inferno, another stock that I found on a pretty successful trader's portfolio. So Inferno, I want to say Inferno was a Soros stock, but if it's not a Soros stock, I probably got it from State Street Capital. You pull this up, you go to the valuation tab, take a look at this. look, fair value $33.76, current price below $5, right? So what I'm doing with this one is I'm just acquiring more and more shares. I did sell covered calls at $5, which means I won't be able to get the entire intrinsic value of the stock if it does go on a run. I'm okay with that. I'm just adding to my position and adding to my position, adding to my position by selling covered calls. That's what I do with most of my plays. RepX, I got into this stock as well. This stock is 81.6% under fair valued, and they basically are an oil exploration company, and they find where oil is. So it's very, very important for these oil rigs that are out there in the ocean. RepX sort of finds where the oil is before they start drilling, which is super, super helpful. We'll skip down some of these that I don't have a whole lot of research into. American Airlines, surprisingly enough, is 52% under fair value, so Simply Wall Street Simply Wall Street did see what I saw on my scanner, where airlines are going to be extremely undervalued going into the next quarter because they were able to lock in set oil prices in the futures markets. Scrolling down here, Valley Bank, one of the biggest Michael Burry holdings, still 40% under fair value. They have a really attractive dividend. So if you're interested in holding a bank stock long term, get into Valley at this massive, massive discount and hold it for long term. JD.com, of course, is on here. AES, probably take this one off. It kind of moved back to fair value. I got into AES when it was a little bit cheaper than this. It was a utility stock. I kind of wrote it out and I did sell it. It's no longer in my portfolio, so we'll remove that from the watch list. Bank of America stock. This one basically has no risk because it's not a regional bank, and it is still 15% under fair value, and it gives out a pretty decent dividend. So if you're interested in owning Bank of America long term, maybe selling covered calls on it while collecting your dividend, now's not a terrible time to get in. Alibaba is on here. I just have it on here, and of course I like to track GameStop and kind of see where the fair value of this company is at all times. So GameStop, if you were to take the fair valuation of it and take away all the hype crowd, take away all of, everything with Ryan Cohen and everything else like that, the fair value that Simply Wall Street puts it at off of just its balance sheet, its raw numbers, and its earnings is somewhere around $20 a share. Current share price is $24.50. So for those of you that are looking to get into GameStop and you know where the fair price is, I know Warren Buffett always says this quote, but it's like, do you want to get into a bad company at a discount, or do you want to get into a good company at a fair price? And GameStop's one of those good companies at a fair price. I don't mind owning GameStop, but I want to own GameStop at a fair price, and I want to run it back up to where the hype is, right? So GameStop goes through these hype cycles, that goes through these spikes that get very, very volatile. And if you're smart at trading it, you can get in at fair value or below fair value, and you can run it to when these news spikes come out, like when Ryan Cohen bought more shares. Boom, massive spike, went up like $4 a share. So that's kind of how I play it. And what a lot of people don't understand in the meme stock community when it comes to these meme stocks is the actual best way to play these is to actually naked short, or essentially not naked short, but basically buy a cash secured put, which is also like naked shorting a put, on the fair value mark, right? So watch what would happen if I naked short GameStop on the fair value mark. We'll go to options strat, and shorting a put is actually bullish, guys. So I'm not being bearish on the stock here. Take a look at this, right? So if I was to take a cash secured put, right? I was to search GME, right? And let's say I pick like 24 days out because that's when theta decay is at its most. I always preach. I made a whole options video. Look, if you're going to get into options, if you're going to be short options, you want to short an option between like 23 days and like 30 days, right? Because that's when you're going to get exponential theta decay. Take a look at this right here. Hold on, let me zoom in a little bit for you so you can see. This is the best thing you can do for the stock, by the way. So if you are a meme stock investor, you only invest in meme stocks, I'm showing you right now the keys to the castle, how to generate the most equity in the meme stock of your choice, right? Meme stocks go on crazy volatile rips. They trade above fair value like GameStop is right now. And if you're that kind of investor that wants to hold one stock and one stock only until the day you die because you believe in Ryan Cohen, I'm going to show you the best way to get as many shares as possible, right? So cash secured put at $20, right? For 100 shares of GameStop, if you short the $20 put, right, it allows you to buy GameStop where? At its fair value, right? Because if we take a look at this, what's by break even? $19.83, or 20% down. Where's the fair value? $19.72. Fair value, right? Now, the problem with this strategy is you're going to tie up $2,000 of cash to only make 17 bucks, right? But by doing this, you guarantee that you buy GameStop at fair value. So right now, you don't know if GameStop's going to climb higher or if it's going to come back down and kind of do a little bit of a retracement. No one wants to play puts on GameStop because it hurts the movement, right? It hurts the upwards trend if you buy puts on GameStop, right? But if you short puts on GameStop, basically saying, hey, I'm willing to buy the stock over here for 100 shares at $20 a share, that's what you're saying to the open market when you short a put, right? You're going to get $17 for free credited to your account for just keeping your money tied up in collateral to make this trade. As the stock comes down, let's say the stock dips below $20 before expiration, and then on expiration day, the stock is $19.50, whatever, you're going to be exercised on your put contract. You're going to be forced to buy 100 shares at $20. And you might be saying, but that's a bad deal. But here's the best part about it. You got $17 to help you towards that purchase. Now, $17 might not even be one share right now. But let's say GameStop's price fell from $25 down to like $21. Look what happens when you short a put close to the money. You get a whole $126 credit. $126 is five shares of stock at $25 a share, right? So that's pretty powerful, right? You're basically getting 5 free shares of stock while helping the stock push up because you're shorting a put. It's a bullish options contract. By doing this, you're bullishly affecting the stock by the 100 shares, right? Now, if it falls below 24, no big deal. You just got to buy it at $24 per share, which is why I don't recommend shorting the 24 strike because you're going to be forced to buy at $24 a share. If we go back and look at the fair value, you're going to be overpaying by $4 per share. Doing this in the long run is not good for your portfolio if you keep buying stocks over fair value. I personally don't like doing it, right? I got into GameStop at a very early time, and I slowly eased my way out of the majority of my position at a much higher price, and I kind of use that now because I know a lot more about the markets now to just make more money while I wait for the play to play out. That doesn't mean that like if GameStop was to fall a little bit more, I would 100% buy more because I am a fair value investor. I like to look at the fair value at stocks, and I like to play around that fair value. So for all of you that are out there looking to build wealth, looking to make more money, that's where I would look. I would also look into IPOs. So when stocks first debut in the market, that's when you're going to get the most price discrepancy. So of course, in low float stocks, when any news comes out, any crazy earnings comes out, these low float stocks run more than any other stock. So low floats and IPOs are going to show you your biggest value discrepancies in any stocks, right? So one of the stocks that we're playing right now is actually IMPP. So if we take a look, IMPP. Take a look at this. Market cap of IMPP right here. The market cap right here, 70 million for this stock, right? $70 million market cap. And take a look at what they earned last quarter in net income, 35 million, right? So this was kind of a major shift, right? Another thing that IMPP is doing is if you invest now, as in on the 21st, so if you're watching this video, if you own IMPP by market close on the 21st, you also get one free share of CISSV, which is their spin-off company. The spin-off company makes $30.6 million in net revenue, and their market cap is somewhere around like 16 million right now. I don't know if that's accurate or not because, again, this just IPO'd, so TradingView is probably wrong in these numbers. I know they have like 3 million shares, so 3 million shares times 5.7 is probably around 16.7 million. So yes, this does look accurate. This market cap does look accurate. I know the fair value price for this stock is somewhere around $5.70 based on their assets versus liabilities. And if you look at their net income at 3.6 million per quarter, if they can keep that up and not even have any growth, their market cap is going to be much more than 16 million in the very near future. So this is one of those stocks where if you hold it for just a year, you're going to see an instant return on investment. And that's, look, you get this stock for free. It's literally like a door prize for owning IMPP, which is a little insane. By the way, IMPPV is IMPP without the dividend shares. So keep that in mind if you're looking on the market. IMPP includes the dividend shares inside. I recommend getting the dividend shares of the C3IS company and also owning IPP and just holding this for a year. Because look, if they report their next earnings and their next earnings is another smash where it's like 35 million net income, there's no way that this stock is going to be valued at $70 million anymore. There's just no way. It's going to be up here at like 100 million, something like that. And it's instead of being a $4 stock, it's going to be like a $10 stock, $7 stock. The CEO already said, hey, I'm not diluting anymore. And what does IMPP do? They deliver petroleum. They're boats that deliver petroleum. So when you're looking at stuff to basically ride up when the market's coming down, this is what you need to look at. You need to look at like petroleum, you need to look at energy, you need to look at healthcare, stuff like that. So, as always, I feel like tech is a little bit overvalued right now. I know the AI trend sort of brought it there, but I think all major indexes are a little bit too inflated. I think all tech's a little bit too inflated. I'm targeting energy right now, and I'm looking at the biggest bang for my buck. And I see stocks like IMPP, I see stocks like Rebex, and stuff like that. So I don't know what everyone else is seeing out there. Post down in the comments down below. I will check any stock out. I do a ton of research on this stuff, a metric ton of research on this stuff. I manage a portfolio that is close to 6 figures, and it's only growing with more and more clients. So if you're interested in growing your wealth, tune into these videos, check out our strategies, join the Discord. I give out a lot of free stuff. I don't sell t-shirts, cups, none of that. All my investment tools are on my website for free. So thanks for tuning in. And as always, I'll see you next time. Peace.